The primary difference between bonds and loan is that bonds are debt instruments issued by the company for raising the funds which are highly traded in the market, while bank loans are not really traded on market except between banks. Banks between them can trade the loans. Let's take a closer look on main differences between bonds and bank loans. So as you can see here, I will explain point by point the differences between bonds and bank loans. So regarding the maturity, in case of the bonds, it is limited or it can be infinite maturity forever. Bonds usually can achieve longer maturity than bank loans. In case of the bank loans, we speak about limited maturity, 5, 10, 15 years. So usually shorter maturity than bonds, which depends very much on a company and their risks. Then about the reimbursement. Reimbursement in case of bonds is done at maturity, or it can be on amortized profile over the certain number of the years. Can be reimbursed also at redemption window. It means in certain stage after a few years you can refinance or redeem your bonds. In case of bank loans, it can be reimbursed normally with annuities, but it can be also reimbursed at any time you want. Regarding the trading, the bonds are traded and quoted on markets, while the bank loans are not traded except between banks. Between banks they can trade the loans, but normally the bank loans are not traded between different persons. Rating. In case of bonds, you need a rating agencies. In case of the bank loans, it's not the case. There is no rating required. However, banks do credit research. You need credit approval to get the loan. Regarding the prospectus, we have explained that in case of the bonds, you need prospectus approved by the regulatory agency. In case of the bank loans, no specific prospectus is needed. Regarding the purchase options, in case of the bonds, bonds can be purchased by anyone. In case of the bank loans, it is reserved only for banks. Finally, speaking about the interest rates, in case of the bonds, in most of the cases, it is fixed interest rate. Coupon rate is the fixed interest rate, while in case of the bank loans, in most of the cases, we speak about floating or variable interest rate that you can potentially fixed or hedge. In some countries, you can get also some fixed interest rates, but it's not the standard practice of banks.